Petty cash fund. What is it and why would a business need one? These are questions we must ask ourselves as accountants to understand how cash flows in and out of a company. A fundamental key of business requires disbursements of cash to be recorded and monitored, either through electronic transfers or double-signed checks. On the other hand, there are instances that arise in a business that small amounts of cash are needed quickly for a purchase, for example, more printer paper or express post envelopes. When these situations do occur, it is tedious and time consuming to simply write a check for a minor amount of cash. Therefore, by establishing a petty cash fund, we eliminate the need to write out a check. As such, a petty cash fund is just a small amount of cash kept on hand by a business to pay minor expenses. These amounts of cash will vary from business to business. Now that we know the need for a petty cash fund, we also need to know how they're created. The initial step is to write a check out for the fund, followed by cashing the check in, and finally, delegating an employee to overlook the fund. Now, let's look at an example from an accounting perspective of how it is created. Suppose a protein company, Hardbody & Co., cashes $650 check in order to establish a petty cash fund. We would therefore debit petty cash $650 and credit cash $650, which thus creates the fund. An accountant would do this in order to keep the accounting equation balanced. This equation is assets equals liabilities plus equity. Because cash has not yet been dispersed outside of the company, no change should be recorded. There are two things employees can do with the petty cash fund. That is, they can take money from the fund, or money can be reimbursed back into the fund for payments made by the employee. In either circumstance, receipts must be collected and journal entries must be made when the fund is replenished. When the petty cash fund is continuously used, at a certain point these funds must be replenished. This is done by first acknowledging the remaining fund left. Let's assume that only $50 is left in the fund after purchasing office supplies. As such, we would cash a check for $600, therefore replenishing the fund back to its original $650, with the remaining $50 that was left. This would be followed up by a report that would be compiled. Thank you for listening and I hope you enjoyed.